Welcome to the Swing Trading with Cycles channel. We're going to do an update on Dixie today. It is February 11th, 2023. And just as a reminder, if you're new to this channel, take a look at the pinned comment. If you're not following on Twitter, you can see a link for that. And also you'll see past videos. But I tweeted about this a while back. So this was January 7th, where I said, so I'll zoom out, where there will be rallies in Dixie for 2023. But that's only because nothing goes down in a straight line. It's in a quarterly downtrend. And so we would expect that those rallies would end in lower highs. At that point, we had a potential weekly cycle low on week 30, and we're going to look at that. So the idea is, okay, maybe we get a rally up for 6 weeks, and then a lower low, another rally, and then another lower low. That's still my expectation. It just kept going down in between that time. So let's look at the weekly. Let's start with the weekly chart. So that week 30 would have been here, I think, actually, right? So that... right, because this is week 35, so 34, 33, 32, right. And so you can see what happened. Like, the candle just kind of collapsed. Let's go back to that chart. Look at that. It's a great lesson in how candles transform, and it's not over until it's over. That candle just got, completely kind of wiped out. And, of course, the following week, we made a lower low, consolidated a little bit, made another lower low, but then we rebounded, as we talked about in the previous video. This is a bullish outside weekly candle, and we just got follow through. So what does that make this now? Oh, that's right, a swing low. A swing low on the weekly level. This is a swing low after declining for 18 weeks. So we had a 17-week rally. That's all of this. That's what this 17 means, right? That's week 17 of this rally. So we rallied for 17 weeks, and then we declined for about 18 weeks, broke down below the low of the previous cycle, and then we've reversed higher. And so that move that we were talking about, it's just gotten pushed forward in time. So instead of coming from here, it's coming from down here. I would still expect we're going to get a short weekly cycle. And so again, this was week 1. But think about that. That means we could still have another 4 or 5 weeks of rally in this. So this is a pretty good bet for the next few weeks. So call it the end of April, maybe all of March. Could be some nice upside. The way I'm playing this is through UUP, which is an ETF that tracks the Dixie. And if you look at the daily chart, as I tweeted about, this was the day that formed our daily cycle low. You can see it was a reversal, opened lower than than the previous day's candle, so we made a lower low, and then we came back, reversed. Then we got nice follow through for 2 more days, right? That's what cemented, okay, this is a daily cycle low. And then we made a high on day 3. This is day 3, this red candle here. And then we tried to make a lower low, but we didn't. Look, I tweeted about that specific thing. I drew that, look at this line, which is just the lower end of the range on this candle. We didn't break below that. And then the next day, we tested that area again, didn't break below it, went bullish. The next day, we did break down below it. And what is that? That's right. It's a false breakdown. That's so important. Going below this wick, taking out, think about how many stops would have been placed around here. All those stops got triggered and then priced immediately, or maybe not immediately, but a pullback, or excuse me, a lower wick is always a rally on a lower time frame. And then we got follow through for Friday. So that's day 3, 4, 5, 6. So Monday will be day 7. So you would expect that this is going to make a higher high. And again, so this is 4, 5, 6. So that would mean that we probably get a high on day 7. Now, the sort of the 800-pound gorilla in the room is the CPI number. That comes out Monday at 8:30. And that's really going to tell you, is this daily cycle going to continue or is it going to collapse? But the risk reward on this is great because we're still relatively early in the daily cycle. So Monday's going to be day 7, right? Let's just, just a scenario here, right? Let's just say we get something like this Monday, right? Like something like that. So it just pokes above, makes a new high for the daily cycle. Now we have an awesome setup going into CPI because we're either going to get, and obviously the minute after CPI is released, so like that 8:30, like that candle is going to be pretty volatile. It's going to probably spike down or spike higher. So it's going to be pretty ugly, but once it settles out, let's say Wednesday, Thursday, we'll see where we're netting out. And we're either going to continue the daily cycle rally, in which case we're relatively early, because Tuesday will be day 8. So we're still, it's not super early, but it's not late. And so One could catch the continuing move, the weekly cycle would continue to advance, or we get some kind of violent reversal. This little bull flag that's been holding up, that's what it is. This little bull flag collapses, and then it's a good short opportunity. Because I mean, we talked about how, look how we could barely close 2 days above the 10-day moving average. Now we finally got above the 10-day moving average, and we're holding above it. We're holding a higher low. Excuse me, we're holding a low. And so this is either a launch pad for a move higher, or it's the reset to short. Because at this point, as you're just cascading lower, this is not a high probability short because you're kind of shorting in the hole. This is nice because you're getting a little bit, you've kind of soaked up some demand, and so now it kind of sets you up for a bigger fall. So that's just a really awesome setup because it becomes very binary. You know, either we're going to get a nice big move up and we're going to enjoy the rest of the daily cycle advance, or we have a daily cycle that topped out on day 7 or day 8, and we can play it all the way down to the low on day 18, 20, 25, whenever that is. But it tells you have at least another few weeks down for the daily cycle. So awesome setup here. If we go to the monthly chart, and then we'll look at UUP just to look at equivalent levels, we have poked down below the low of January, and so what we're playing for here is a potential bullish outside monthly candle. So breaking above this high here. Now, there's still quite a lot of month left. And again, this is the real alpha, where you start to think about how all the time frames work together. If the daily cycle keeps advancing and the weekly cycle keeps advancing, again, considering we're on week 1 of a weekly cycle this week, so week 2 starts next week, the CPI week. It means that the likelihood that this does become a bullish outside candle increases, right? Maybe it doesn't get all the way there. Maybe it gets right. And what is that level? It's 105.631, right? So that's about 2 points from here. So about 2%, which is a pretty big move for the Dixie. You can imagine we get like right to it and then we pull back. That would still be a nice little rally, but also a great short opportunity once we see the lower time frame swing high. So that's the level that you want to be aware of. But just notice, one of these things is not like the other, right? 4 months of reds, and we so far have a green candle. And again, if the daily cycle continues to advance, we'll obviously close green, and that sets you up what happens in March. Again, this thing is in the long-term downtrend, though. So my expectation is still something like that, right? Another little rally and then another decline into the final low, and that gives you and that gives you something where you might get a rally for several months. So that's the Dixie. Let's look at UUP to see some equivalent levels. We'll start with the monthly chart. We'll see what is the equivalent level to create that bullish outside monthly candle. So for UUP, that would be getting above 28.33. So we're here. We closed at 27.98. So right, that would be getting up to 28.33. And I know that doesn't sound like a lot, but take a look at the call. Take a look at the if you look at the options contracts. If you can find something, they're relatively cheap in terms of the implied volatility, and even with this small little move, you can find contracts that are trading, excuse me, for pennies, and so you can get a nice 2-3x sort of easily. But that's the move that we'd be playing for, right? That this candle becomes a bullish outside candle, and if we zoom into like the daily chart, you can see it's the same structure as the Dixie. Obviously, it doesn't trade overnight. So it is prone to gaps, and there is a gap here. That's another thing to be aware of, right? Because we're going to play this both ways. So imagine we get a move up to this line here, right, around the 28.30 area, and then a collapse lower, and you could see us moving through this gap, like to refill it per se. And so this is a beautiful setup, right? If we can see a sustained rally for the next few weeks, catch that, and then you sell the swing high. Go short if one is aggressive. Because again, this thing topped out back here, and so we would expect that it's just making lower highs. These are all lower highs along the way. So we'll keep you apprised on this channel. But before we do that, actually, let's just take a quick look at rates, because while the dollar was screaming higher, rates were also screaming higher, and now they appear to be doing the same thing. So This was your swing high after this, the start of this rally. So we rallied for 12 days, and then we had a swing high. It appears that this may have been our daily cycle low here, right? And what day is that? And this is the, excuse me, this is the 30-year bond. This is highly correlated with TLT. So that's day 28. And so this has been moving, the yield, this is the yield. This yield has been moving in the same direction as the Dixie. And so this tells me that it's bad news bears for TLT. So that would be day 16. So it's not early in the daily cycle either, though. So that's important to know about. So that's your long bond. Again, that's the yield. Remember that yield and prices move inversely. And if we look at what that means for TLT, look at that thing. This thing is just rolled over. So, and that's the beauty of cycles. Once you have this swing high, you're like, well, is it likely it's going to come back up and make another higher high, or are we moving into the cycle low? In this case, more likely that we're moving into the cycle low, and we're leaving some furious gaps behind. Always important to note the gaps because they probably get filled on the other way as well. So that's 24, 25, 26, 27, 28, 29. So day 29, I believe it is. So it is getting later in the daily cycle. So that's the only sort of saving grace. Actually, it's day 30. So that is the lay of the land. Yields going higher, dollar going higher, at least for the short term. Obviously, the CPI number is going to be really telling Tuesday morning, February 14th. That's all we've got. We'll leave it at that. Thanks for watching.